Hi everyone, my name is Hans Baldau, and I'm a senior research analyst at CFRA, where I cover the information technology sector. Today I want to give a quick overview of the quantum computing space and touch on our latest initiations in IonQ and D-Wave. Here's our disclaimer. We see two major storylines playing out in the quantum computing space, the first being government validation of the industry. In May, the US government invested $2 billion into the industry via the CHIPS Act, and more recently issued two executive orders. One targeting a research-grade quantum computer by 2028, and the second mandating a shift to post-quantum cryptography by 2031. We see this validation as marking a shift from what was essentially an industry and R&D mode to now a national security priority. However, we remain measured on those timelines, as experts put quantum advantage around 2035 at the earliest, and we note that the industry has a long history of delays. The other big shift we are tracking is the move from narrative to milestone-driven values. Currently, most quantum companies trade at sky-high multiples driven by sentiment and promising technology. However, now that companies are publishing detailed roadmaps, we think the market will start holding them accountable to those targets. In turn, we expect that to weigh on multiples, pulling them down closer in line with the broader high-growth tech sector. On IonQ specifically, we're starting coverage with a hold and a $67 price target. We think the company is a standout in pure play quantum with $65 million in Q1 revenue, up a massive 755% year over year, and they have $470 million in contracted backlog. We see the technology as genuinely differentiated. The company boasts a world record 99.99% fidelity, and they're building out a full stack picks and shovel platform that could position them well regardless of how the quantum race plays out. Now, our biggest concern is the acquisition strategy. They're integrating 6 deals at once, including a $2 billion Skywater transaction that is expected to close in Q3, along with heavy EBITDA losses of close to $100 million in Q1 alone. Additionally, the roadmap is aggressive, and we question whether the company can stay focused on advancing the technology and hit those milestones on top of the integrations. With that in mind, we are monitoring the 256 qubit system demonstration at the end of this year as a near-term proof point. Until we see the company execute on both quantum technology and the acquisition integrations, we are remaining on the sidelines with a hold. Moving on to D-Wave, we're initiating with a sell and a $17 price target. The bookings number looks impressive at first glance, 33 million, up nearly 2,000% year over year. But that growth came off a base of only 1.6 million, and just 2 deals account for around 90% of it. The bigger issue is the gate model pivot. D-Wave is entering this race late with a gate model built on a superconducting platform. And while their dual rail architecture offers some differentiation, superconducting is the same platform that the likes of IBM and Google are building on, and D-Wave's balance sheet just can't compete. Additionally, we see the roadmap as somewhat underwhelming. D-Wave is targeting 10 logical qubits from 1,000 physical by 2030. To put that in context, Quantinuum's Helios system is already delivering 48 logical qubits from just 98 physical today. On top of that, shares outstanding have grown 226% since 2023, representing a significant dilution, and we expect that to continue in the coming years. At 56 times forward revenue, we see the stock as expensive and overpriced. We see multiples compressing from here, resulting in our sell rating. That is all I have. If anyone is interested in learning more about quantum industry or any of our other research, please visit marketscopeadvisor.com. Thank you.